You got the raise? $4,200 a year? You did the math on the drive home. $350 a month, new number, new breathing room. You told your wife before you even took your coat off. The first paycheck came in. The extra was not $350, it was $212. You stared at the number for a long time. You had not done anything wrong. You had not misunderstood. The government had simply taken the rest before you could see it. Nobody explained this to you, not when you started the job. Not when you negotiated the raise, not in school. The tax system is the largest financial system most people interact with every single day, and almost nobody understands how it actually works. By the end of this video, you will. Level 1, income under $30,000. This is where the tax system is supposed to be lightest. And in some ways it is. The federal rate on your first $11,000 of income is 10%. But here is what nobody tells you about Level 1. It is also where the tax system is most expensive per dollar earned. FICA, Federal Insurance Contributions Act. 7.65% of every dollar you earn goes to Social Security and Medicare before you see it. Not after income tax, before, at $30,000 income. That is $2,295 gone before the income tax calculation even begins. Most people earning $30,000 have never heard the word FICA. They just know their check is smaller than they expected. Here is the thing about FICA that changes everything. A billionaire pays FICA on his first $160,000 of wages. After that, nothing, zero. The tax that hits hardest at $30,000 income stops entirely for the person earning $10 million. The system was built this way, on purpose, by people who understood it completely. Level 2, $30,000 to $75,000. This is where most working Americans live. And this is where a concept called marginal tax rates becomes the most misunderstood idea in personal finance. Marcus got a promotion. Salary moved from $58,000 to $72,000. His coworker told him to be careful. Higher bracket means paying more tax on everything. Marcus almost turned down the raise. He did not because his wife looked up the actual numbers. Here's what she found. A higher bracket does not mean you pay more tax on all of your income. It means you pay more only on the dollars that fall in that bracket. Marcus's first $11,000 was taxed at 10% regardless of his final salary. The next portion at 12%. Only the portion above $59,000 entered the 22% bracket. The raise moved some dollars into a higher bracket, not all of his dollars. Never all of his dollars. Marcus took the raise. The coworker who warned him is still at $58,000. Marcus is at $72,000. The coworker's advice cost him $14,000 a year in salary because he misunderstood one sentence about how tax brackets work. Level 3, $75,000 to $200,000. This is where the tax system starts offering something it never offered at level 1 or 2. Choices, legal choices. Choices that people at level 3 use to keep significantly more of what they earn, and that almost nobody at level 1 or 2 knows exist. Daniel earns $94,000. His taxable income is $61,000, not because he cheated. Not because he hired an expensive accountant. Because he made 3 legal decisions that reduced what the government calculates his income to be. A 401k contribution, a health savings account. A home office deduction for his rental property management. 3 decisions, $33,000 removed from taxable income. Legally, the 401k. Every dollar Daniel puts into his 401k reduces his taxable income by that same dollar. He contributed $23,000 last year. That is $23,000 the government cannot touch until he takes it out decades from now. By then, his tax rate will likely be lower. He pays less now, he pays less later. The money compounds in between. The health savings account. If you have a high deductible health plan, you can contribute to an HSA. The contribution reduces your taxable income. The money grows tax-free. When you use it for medical expenses, tax-free again. Triple tax advantage. Most people with qualifying health plans have never opened one. The account exists, the advantage is available. The form takes 11 minutes to fill out. Level 4, $200,000 to $1 million. The game changes here completely. Because at this level, the tax system stops being something that happens to you and starts being something you can architect. The people at level 4 are not smarter than you. They have one thing you do not: an accountant who charges $400 an hour and saves them $4,000 for every hour spent. Priya earns $240,000. She is a partner at a mid-size firm. She pays herself a salary of $90,000. The remaining $150,000 comes through as business distributions. Salary, subject to FICA distributions, not subject to FICA. That is $11,500 she does not pay in payroll tax, legally, because she structured her business correctly. Depreciation. If you own rental property, the government allows you to deduct a portion of the property's value every year, as if it is losing value, even when it is appreciating. Daniel's rental property reduces his taxable income by $8,000 a year through depreciation alone. The property went up in value by $12,000 last year. He reported a loss on paper. The tax system rewarded him for owning something that made him richer. Now here is what you do with this. Tonight, whatever level you are at right now, there is one action available to you that most people at your level are not taking. If you are at level 1, open an account with your state's VITA program, volunteer income tax assistance, free tax preparation by our certified volunteers. It exists in every state. Most people at level 1 overpay their taxes because they miss deductions they qualify for. VITA finds them for free. The average VITA refund increase is over $1,000 per return. If you are at level 2, increase your 401k contribution by 1% tonight, just 1%. If you earn $50,000, that is $41 per paycheck. It reduces your taxable income immediately. Your take-home pay drops by less than $41 because the tax saving partially offsets it. 1% tonight, before the next paycheck. If you are at level 3, open a health savings account if your health plan qualifies. Search HSA eligible health plan tonight. If you qualify, the contribution you make reduces your taxable income dollar for dollar. The money grows. The medical spending is tax-free. The account follows you job to job. It does not disappear when you change employers. If you are approaching level 4, hire a CPA who specializes in small business and real estate, not a tax preparer at a chain service. A CPA who charges by the hour and talks about structures, not just returns. The conversation changes at this level. The tax return is the last thing they look at. The structure is the first. Here is the sentence that should change how you think about taxes for the rest of your life. The tax code is not written to take your money. It is written to incentivize behavior the government wants to encourage: retirement savings, home ownership, business creation, healthcare. Every deduction exists because the government wants you to do that thing. Understanding the incentives means understanding the code. Marcus almost turned down $14,000 because he misunderstood one sentence. Daniel legally removed $33,000 from his taxable income with 3 decisions. Priya saved $11,000 in payroll tax with one structural choice. None of them cheated. None of them had secret knowledge. They understood the incentives. That is the entire difference. If this changed how you see your next paycheck, subscribe. This channel takes the financial systems most people live inside without understanding and walks through exactly how each level works. Banks, credit cards, death, and your money. Taxes this week. Next week, how insurance companies treat you at every level of wealth. Button is below, free. And in the comments, what is the most money a tax mistake has ever cost you? Not on purpose, just not knowing. A deduction you missed, a bracket you misunderstood, a form you did not file. Drop the number. Because someone reading that comment is about to make the same mistake, and your answer might stop them.